What's going on, guys? Welcome back to the channel. Welcome back to another video. Ron Yates here. Hope you guys are doing well today. So in today's video, I want to talk to you guys about building wealth. Building wealth is still possible. Now, you guys might have recently heard multiple warnings from the Federal Reserve. We've heard from JP Chase today. As a matter of fact, JP Chase just acquired First Republic Bank. Now, we've already heard about the collapse, the Silicon Valley Bank collapse, Credit Suisse Bank collapse. What other banks have collapsed? So, I mean, you got First Republic today being acquired by JP Chase. And the interesting thing about this one is that JP Chase did not purchase the preferred shares from First Republic. And so of course, they also didn't take over their debts, but they did purchase the assets from First Republic Bank. So what happened on this one is that institutional investors were not made whole. But this is a distraction, and I want to just point this out to you guys. This is a distraction. Billions of dollars are being made as we speak. Meanwhile, you got all sorts of people complaining about the different banking systems or the different banks that are collapsing. And the simple fact of the matter is that no one's really losing any money. No one's really lost any money. We saw Silicon Bank collapse. FDIC stepped in. They made sure that everybody was good. And here's the thing, guys. If you guys saw my video just the other day, I was talking about how to protect yourselves in the face of bank collapse, future banks collapsing, and how you can protect yourself. Today, I want to expand on that, but I want to talk and focus more on wealth building, right? And if you guys have been following the channel for a while, you know that I've been investing in the stock market for well over 15 years, probably 20 years. I really need to sit down one day and just calculate how many years I've actually been investing in the stock market. But if you look at the history of the stock market, the S&P 500, NASDAQ, the Dow Jones, the stock market has returned on average, let's just say 10, 11, 12% a year in returns. Now, you know, that's not taking into account inflation, but inflation, you know, it is there, and it will always be there. In fact, the Federal Reserve's target inflation rate is 2%. They're not targeting 0%. They're not targeting negative inflation rates. They want inflation to be a part of the financial banking system, a part of the financial system, a part of our monetary system. The key is, the thing that I realized a long time ago, many years ago, is that the stock market is one of the easiest ways to compound your money and make your money grow and make your money work for you. And the sooner you can get your money compounding and growing for you, the sooner you are no longer required or no longer needing to trade your time for money. Now, there's several different ways that you can speed this process up. It doesn't mean that you have to invest in the stock market, but it's one of the easiest things that pretty much anyone can do. And if you're just keeping your money sitting in the bank, earning less than 1% for most people, in most cases, it's a losing game. It's a losing battle. So this is why I don't like to keep a whole lot of money in the banks just sitting there doing nothing. I want my money growing. I want to generate passive income so that money can continue to compound over time, and it is not requiring me to do anything physical. And so this is a practice that I have been implementing on and executing for years, okay? And the amazing thing with investments today is that it has become so easy. When you can pull your phone out, most people just pull their phone out to use it for Facebook, social media, Instagram, Snapchat, TikTok, you name it, right? But that same phone can generate more wealth than you could even spend, and put yourself and your family in a position so that you don't have to trade your time for money. Now, that same phone can download apps like Webull, Robinhood, what's another one? E-Trade. Name your favorite online investment app. Moomoo, Fidelity, and Vanguard. Name any of your favorites, right? Now, the thing is, a lot of people won't do this. Most people won't take the time. And the funny thing is, it only takes like 10-15 minutes to open an account, create an account, and literally you could be investing in the stock market. You could begin to own companies that are on the S&P 500. And believe it or not, years ago, I started investing with as little as $50. And the funny thing is that most people that I knew of, that I ended up telling, they laughed at me. $50 a month? What's that going to do, Ron? How is that going to help you to build wealth with only $50 a month? That's nothing. Well, guys, I'm just letting you know how I started and what I did to be able to build a 7-figure net worth during this time frame. Right? Now, you can start small and you grow it over time. The key, though, is that you have to start. And most people are not starting. And the most interesting thing about investing for me is that saving was very, very hard for me to do. I don't know about you guys, but saving was definitely not one of my strong suits. But the moment I started investing, that changed everything for me. And I think the reason why it changed it for me was because when you're investing, you're buying companies. Some of the companies you're buying, they're paying dividends. And I understood that the more companies that I owned that paid dividends, the higher my passive income that would be generated per month, per quarter, or per year would be. So the last thing I wanted to do is to sell out of my stocks and reduce the number of shares I owned, because that would reduce how much passive income that I would be generating from the dividend paying stocks. So investing in the stock market actually helped me to become a significantly better saver. So I just wanted to share this with you guys because this was incredibly eye-opening. And a lot of people, they'll get their paycheck, they'll pay all their bills, they'll go out and have fun, make their car payments, credit card bills, whatnot, go to the mall, go shopping, plan vacations, and with whatever is left over, go to expensive restaurants, and with whatever is left over, then they will consider trying to invest that. My philosophy was totally different. Once I understood the power of compounding interest, compounding my wealth, I focused on making sure that I could invest a minimum amount per month so that I could hit the goals that I had set for myself. So while I started off with $50 a month investing in the stock market, I began looking at ways I can cut expenses out of my life so I would have more available capital that could be invested into stock equities, index funds, ETFs, and the like. So start small, but start early. And the earlier you start, the faster and more leverage you'll have in terms of the compounding effect and how it will help you to build your wealth. And it will be building your wealth even while you sleep. So I hope you guys got some value out of this video. Really appreciate you guys. If you made it this far, drop a like for the video. Consider subscribing to the channel, and I'll see you guys on the next one. Be safe.